Ethereum has roared back to life. After months of sideways drift and muted activity, on-chain data now shows daily transaction counts surging past 1.2 million. Levels unseen since mid-2021, this revival isn't a flash in the pan, it reflects meaningful improvements under the hood and renewed confidence among both retail users and institutional players. Across decentralized exchanges, DeFi protocols, and stablecoin issuers, the network hums with activity, creating a sense that Ethereum's promise as the world's programmable settlement layer is finally being realized. At the core of this resurgence lies a series of scalability upgrades, most notably the Pectra. Upgrades that have slashed gas fees from punitive highs of 300 GUA down to a modest 5 to 6 GUA. According to lead developer Arjun Bhuptani, we are approaching a record daily transaction volume since 2021, Bhuptani explained. We've made real progress in expanding the network, and this promises a brighter future. Lower fees have erased one of the biggest barriers to entry. Users no longer need deep pockets to participate in DeFi lending, NFT minting, or tokenized asset trading. Institutional confidence has followed suit. Over the past 2 months, long positions in ETH have jumped from 52% to 64%. A sharp uptick that mirrors the on-chain activity boom. Fundstrat founder Tom Lee sees this as more than just technical strength. The increased utility of Ethereum will simultaneously drive the value of ETH, he asserts. For Lee, the exploding stablecoin ecosystem on Ethereum USDC, DAI, and others acts as the ChatGPT of the crypto world, unlocking new user experiences and financial products that, in turn, support ETH's market capitalization. Stablecoins themselves have become a vital growth engine. Trading volumes and market caps for dollar-pegged tokens on Ethereum have climbed steadily, reflecting their use as on-ramps and collateral across DeFi. Stablecoins flow through liquidity pools, automated market makers, and lending platforms. They generate persistent fee revenue for the network and strengthen each's narrative as the go-to home for programmable money. This dynamic feeds back into ETH demand as projects require ETH both for gas and as reserve collateral. Ethereum's promise extends beyond finance into tokenization of real-world assets, from bonds and commodities to real estate fractional shares. Developers are racing to build compliant, permissioned solutions that bridge on-chain transparency with off-chain legal frameworks. Economic theorists like Daron Acemoglu observe that systems which lower barriers for asset creation and transfer often unlock entirely new markets. In this vein, an ecosystem of asset tokenization platforms could drive a multi-trillion-dollar wave of innovation. With Ethereum poised at its center, yet the road ahead is not without obstacles. ETH recently tested but failed to hold the $2,600 level after rallying from $2,300. And now trades around $2,520. Volatility remains a stark reminder that bullish fundamentals must contend with broader market sentiment and macroeconomic headwinds. Interest rate expectations, dollar strength, and general risk-off flows can still trigger pullbacks, underscoring Nassim Taleb's anti-fragility thesis that networks must learn to thrive amid stress. Another hurdle is institutional product adoption. Ethereum spot ETFs have amassed only $4 billion since launch, a fraction of the $30 billion seen in Bitcoin ETFs. Ecoin Metrics aptly noted, Ethereum has been slow and weak when Bitcoin has exploded. It's not about accessibility, it's about storytelling. Bitcoin has a clear narrative, while Ethereum needs a more unified message. Institutions gravitate towards certainty. Bitcoin's store of value thesis is simple, whereas Ethereum's multifaceted utility story can feel diffuse. To capture the next wave of institutional flows, Ethereum must refine its narrative, needs to foreground concrete, measurable use cases, Layer 2 adoption milestones,
Our real-world asset tokenizations and revenue-generating DeFi applications.
Major players, custodians, asset managers, on corporate treasuries must see ETH not as an abstract protocol, token, but as a strategic asset, offering differentiated returns and hedges against inflation and regulatory fragmentation. Looking further out, Ethereum's forthcoming roadmap item sharding, proto-dank sharding, AP 4844. An enhanced execution environment's promise to boost throughput by orders of magnitude while further driving down costs. Each major upgrade reduces friction and attracts new on-chain activity, reinforcing network effects. Vaclav Smil's studies on exponential growth in technological systems suggest that once Ethereum moves past certain scaling inflection points, its adoption curve could accelerate sharply. Ultimately, Ethereum's impressive recovery has laid the groundwork, but future potential hinges on execution and storytelling. The network now boasts vibrant daily use, cost-effective transactions, and growing institutional interest, but it must weave these elements into a compelling investment thesis. For traders and builders alike, the question is not if Ethereum will grow, but how and when it will transform from a tech-centric experiment into a mainstream financial backbone. In sum, Ethereum has demonstrated resilience and rebounded from stagnation into an era of high throughput and renewed investor confidence. Scalability upgrades have cut costs, on-chain metrics have surged, and stablecoin and DeFi ecosystems continue to expand. The immediate challenge is to translate technical progress into institutional momentum, crafting a narrative that matches Bitcoin's clarity while preserving Ethereum's unique utility. If it succeeds, ETH may not only reclaim new highs, but also usher in the next generation of decentralized applications and tokenized economies, fulfilling its promise as the world's programmable money layer.